we're at 130 BCF, and when we started, it was at 40. So 130, you know for a fact that there has to be another 150. So now you're talking a 250, 300 BCF accumulation of gas, but the gas is there. There's no issue about the gas.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz, and we are getting an anxiously awaited sponsor update from Trillion Energy. And I suggest you go to their site, trillionenergy.com, for more info. Right now, CEO Arthur Halleran is on with us now. Art, when we talked last time, two new wells were about to come on, the Gullich 2 and I can't pronounce the other one, but you know which one I mean. And that was basically going to nearly double cash flow. Are we there yet?
Yes, we are there, and I'm actually right now in Turkey, so I'm giving this interview from Turkey. And so West Akachoka, tested very well and came on production. And then Gullich was a boomer well that tested 16.4 million cubic feet per day. And the big surprise was it was at about 200 psi, and so they had to put it on production at a pretty high rate. So it came on at 6 million cubic feet per day, and with the high pressure, it backs out a bit of the other production, but it all gets produced. And so now we're 4 for 4. We moved the rig south to the tripod, and we've already spotted Bahanli 2 well. We've already have the surface casing in, and that well is a twin of a discovered pool that was never produced. So we already know it's going to have 35 meters of gas pay.
Right. So the seismology has indicated the extent of the gas pay. So not quite as big as Gullich, but still respectable in its own right.
Yeah, it is. And it is more than seismic because they actually drilled it, they logged it, they tested it, and then they capped the well and they never produced it. Whereas we're doing a directional drilling and tap into it. And so 35 meters, it's about the middle of the road. The lower end is about 25, but Gullich, as you know, was like 74, 75 meters. And we only perforated a 5-meter sand, and that's the one that came on at 6 million cubic feet per day. So, and then over time, we'll work our way up and perforate the zones as we go up the borehole.
Right. So probably in all likelihood, we're about the same age. This field's going to be producing long after we're gone, isn't it?
Yeah, long after I'm gone, that's for sure, because you're talking probably all the gas in that well would probably be 10, 12 years, right? But for the field itself, we'll have other wells that we'll be bringing on. So this field is going to be producing probably for 20 years, if not more.
This is going to be your legacy, in effect, this gas production. And you're in Turkey now. You were kind of like an interesting person a few years ago. We've been at this ride now, you and I, 2.5 years. You were of interest to the Turkish energy industry, but now you're a bit of a celebrity, aren't you?
Yeah, because these wells were very technically challenging. They were like front of the envelope for technology, and there was a lot of discussion about whether these wells could be drilled or not. And but our partners supported us in that, and we've done them. We've drilled 3 long reach directionally drilled wells, and at the same time, we have tapped gas that people knew it was there, but we're actually producing a lot of gas. So we're supplying Turkey with a fair bit of gas. We have 2 more locations, and then as people would read my news releases, we also have a set of 5 to 6 sidetracks, which we're going to slip in before the other more conventional long reach type program. So we're well known now because we're 4 for 4. We have many more, and we're producing a lot of gas for the Turkish market.
Hey, can you just briefly explain what a sidetrack well is? Because I'm sure many of you out there don't really know or aren't familiar with these kind of arcane industry terms.
Yeah, so you have a borehole that already exists, and so people remember we completed Akachoka 3. And we went down and we had to fish something out. So the fish means there's something lost in the hole a long time ago, and we had to fish for it to get it out. So that well cost like an extra $2 million. And we were lucky because we were successful. but you can have a runaway. So what we've decided to do, a sidetrack is where you have an existing borehole and you utilize part of that borehole because it's all tied into the platform, the pipeline. You go down, you mill a window, and then you come out with the new well and you go down, and that way you tag new formation, and you don't have to worry about zones perforated below you that now have water, all that kind of stuff. You basically have a brand new borehole, and it's much cheaper. Like the long reach directional wells, we're going like way out, whereas with sidetracks, we're just going out a little distance. So they're a lot cheaper and faster.
Right, and less risky as well, and basically a lot faster. So originally you said a new well every 45 days approximately, and you've been pretty close to that, but this is going to pick up the pace, isn't it?
Yeah, that's right. So these will be like 31 to 35 days and potentially faster. And the other issue is that they're actually reserve wells. So they're in the existing pool. So before they might have did a mapping and they had a third party, and it say there's like 14 or 15 BCF. And for some reason or another, we know what the reasons are, but they only recovered 5. And that means there's still 10 BCF left in that pool to recover it. For the mining people, it'd be like you have a mine, you've got gold ore, and you only mined half of it, and you left the other half of the gold ore sitting there. And so we're just going in there, mining the rest of the gas, because it's there. We're just going to go and remove it. So there's no risk in the reserve. And a sidetrack is a lot easier than a long reach, and so that risk is also mitigated.
Right, and basically, Trillion has been completely de-risked. After really the first well was the most critical and the most risky, because if you'd gotten a dry hole there, which was unlikely, but if you had or hadn't been able to do the prep work that you needed, the fishing, I think that was it. You did fishing on that one, or the second. That was the real risk. Now, this is a kind of a situation where you just rinse and repeat.
Yeah, that's right. The first well was the most complicated because we had a curve, an S curve in the vertical and horizontal plane. And then Gulich was the longest. It's actually almost 4 kilometers measured distance, but horizontally, like in the horizontal distance, we're 3 kilometers out. So that says that any pool that's within 3 kilometers of the platform, we can now reach. And once those two are done, then West Akachoka was shorter, no issues. It's like we know what we're doing, and the sidetracks are not anywhere near as complicated as that.
I think I read that you said over the life of this field, you'll wind up drilling hundreds of wells.
I don't know about hundreds, but you would probably drill, over the life of the fields when we start doing the 3D seismic and so on. Maybe you could do 50 in that range, because we've already done, we're going to be doing 6, because we're not going to do one recompletion, another 6, so that's 12. And then we have the old program. So maybe upwards of maybe 50, 60 wells, but that would be like in the really long history of the field, because there is a limitation of what you can take off the platform.
All right. So as far as the NPV of the company, you recently issued a revised estimate of the field, and it seems like the NPV, correct me if I got the numbers right, NPV of Trillion is close to $1 billion, and you're trading for about 15% of that.
Yeah, I don't like, I'm getting really frustrated. So when we started, we had our 49% reserve was 20 BCF. That's 2P. Then the end of this year, it was 48 BCF. And now after Gulich, because Gulich 2 was really an exploration well, right? So the original reserve well is still sitting there. So now it turns out to be a very large pool, and we're up to 63 BCF. So again, like you say, we're going from, a couple of 100 million to about like 500 million to like 900 million. And our shares are lower than when we first started drilling. So there's a large disconnect. And initially people were saying, well, the reason is because they don't know if you can do this. And so I always thought, okay, after we do 3 wells, first well, they say, okay, they're lucky. Second well, they can say, well, maybe they just have the luck of the Irish. But third well, they would say, okay, they know what they're doing. And it's not as if we're drilling the wells and we're getting like a small little Bic lighter worth of gas. We're getting a lot of gas, but the shares aren't moving, and that's just driving me nuts.
Yeah, well, understood, but patience. I'm sure.
Yeah.
I'm confident. Hey, I've held my position through thick and thin here, Arthur, because of my belief in you and the team, and knowing that eventually value will triumph. Especially, this is no longer your pipe dream here. This is reality. Your pipe dream of taking a mothballed oil field and turning it into a significant producer. Hey, as far as the reserve reports, can we expect to see them increasing over time?
Yeah, you sure will. So the 63 BCF, like these are reserves, right? So they're not the resources. We still have those resource prospects, if you remember from the GLJ report. And it does not include, we're getting the 3D seismic reprocessed, like it's already started. It'll be finished in September. Then there'll be a sequence of mapping. But from the early work, we're going to find, well, we already see the stratigraphic traps that are going to add another, 100 to 150 BCF.
Obviously,
right?
That's a forward-looking statement, but based on your experience, your knowledge, what you've accomplished so far, that's realistic.
Yeah, it is. So if you look at the full field gross reserves right now that we get from the third party, we're at 130 BCF, and when we started, it was at 40. And so if you look at it and say it doesn't include a bunch of the prospects, it doesn't include the new stratigraphic exploration, which we haven't got a report done on it yet. We want to really get the data set up properly so we don't get really slammed by discounting. So 130, you know for a fact that there has to be another 150. So now you're talking a 250, 300 BCF accumulation of gas. And so the geology says there's gas. It becomes an engineering exercise, like I've said in the beginning. How do you drill for these? Maybe you'll do another tripod or a platform or subsea. It's all to do with economics, but the gas is there. There's no issue about the gas.
Right. And then you've got the potential of acquiring adjoining blocks that pretty much, because of your infrastructure, aren't worth anything to anybody but you. Correct?
That's correct. So if somebody were to find a TCF or a half a TCF, they could end up doing their own standalone infrastructure and so on, but it'd be very expensive and pretty touchy, and it would take them years and years and years. Whereas, when you say I'm going to find a half a TCF, you'll find 100 BCF or a 50 BCF. And if you didn't have the infrastructure already in place, you could not economically tie those in. We can run them into our Akachoka, right?
Right. So the potential for far greater expansion than even what's taking place now is obviously present.
That's right. I mean, the infrastructure is our competitive advantage. And the fact that we don't have to spend any money in upgrading it. So all the drilling we're going to do in 2023 and all the drilling that we'll end up doing in 2024, there's no bottleneck for that production in our infrastructure. So we have clear sailing for 2 years, at least.
Well, Art, when we met and I looked at the opportunity here, I said, this is the most undervalued play in my 40 plus years of investing. And nothing that has happened over the past 2.5 years, and especially now that it's a production story and not a development story, I stick to my initial assertion. It still is the most undervalued play that I have seen in my 40 plus years of investing. I've had my successes, I've had my failures, but this stands out as potentially the best opportunity that I've ever participated in.
Yeah, and I'm going to tell you that because of what's going on with the shares, and I've done road shows, we do news releases, all that kind of things, and now as you know, I did a debenture, and the reason why we did a debenture was because there was a rumor that we were going to do an equity raise at a very low price. When I mean low price, I'm talking like in the 30s, and that wasn't us, but that chatter was there, and also with the short positions. So we thought if we did a debenture at a convert of 60 cents, that it would get rid of that chatter. Because, even if you do an equity raise at 60 cents, that's not at 38 cents, right? And so I always said we weren't going to do an equity raise. And I see the debenture as a loan, which they can convert, but at 60 cents, which is not a 38 cent. But the issue is that the shares are still the same price. So now what I'm going to do with part of the money, and I mentioned this before, but really kickstart the expiration to really give a nice, really big elephant story and a really good technical prospect. And my hope then is that the share value will start reflecting that. All the while, continue with SASB because it is the machine.
Right. And really, like we said, it was a mothballed field producing a minimal amount of gas. And then the energy crisis hit. Look, it's obviously prices have come down substantially, almost more than 50% from their peak. But we have next winter coming. And a recent article I read said that futures prices are going up. European gas futures are going up based upon the nervousness over supply next winter. They managed to get through this winter. It was a warm winter for the most part in Europe, but that could, who knows what the weather is going to be next year. It was unusually, unseasonably warm. This winter, it could be unseasonably cold, and that could really send the continent into crisis mode.
Yeah, and I'll tell you, we'll have 4, 5, 6, 7, maybe inching towards 8 producing gas wells to capture any future high price of gas. Like we'll be producing those wells, and if the price goes up to $20 or $30, we'll have a good sweep.
Be there. You will be there. Well, Art, I want to commend you, and the work that you've done is really incredible. I firmly believe that the share price will be reflective of the results, which thus far, obviously, it has not. But you know what? If you're looking to get into Trillion and you're interested in it, this could be an amazing entry point because both analyst reports are saying over $1, $1.50. And if that's not an opportunity, Art, I don't know what is. Make sure you go over to trillionenergy.com, sign up for notifications. The company is the most transparent energy producer I've ever seen. You will receive a weekly drill update telling you exactly what's going on with the company's efforts to increase production. And you'll get a good update on the global and especially the European natural gas markets, which I find personally quite invaluable. The ticker symbols TCF in Canada, in the US, TRLEF. Art, we will be following up with you probably next month, a month after. Keep up the great work. We'll talk to you then.
Okay, thanks a lot. It's been a pleasure.
The Financial Survival Network.